We're on a mission to help founders hit product market fit faster. We do this by interviewing founders that have been there. I'm your host, Adam O'Donnell. This podcast is put together by Zendesk for startups. We offer 6 months free of Zendesk customer support suite for qualified product-oriented companies. Kaustav, thank you so much for being on Sit Down Startup Founder Podcast. I'm excited to hear your story building ECL and just your journey to product market fit. But if you would first just share a little bit about ECL, first, what it stands for, how long you've been working on it, what you do.
Well, first, before I start off, Adam, thank you very much for giving me this opportunity and the platform to have this conversation. I'm fairly certain about it, like a lot of others would be listening to this eventually. So to answer your question, ECL stands for Efficient Capital Labs, right? Quite thoughtfully, once we talk about the journey, you'll get to piece together why this name Efficient Capital. And the question was how this thing started. It's a very interesting story, and I'll try to keep it brief as well as exciting. So I have been in the risk domain for my entire career. Like for 21 years, I've been in the risk domain. 15 of that was with American Express, and then played multiple chief risk officer roles in multiple fintechs, including Cabbage and Petal and so on. So back in 2020, right around the pandemic and the crisis of COVID, there was one of the biggest RBF player, which is the revenue-based financing player in the SaaS space. They had approached me to talk about and be one of their advisors, right? I used to advise for multiple companies. At that point in time, I was juggling too many of these roles, and I said that, hey, why don't we revisit it? And Murphy's Law, during that time, they just took off. They never came back to me to be an advisor. So it was an opportunity lost. But the good part was that the founder and me, we connected and we ended up being friends. And fast forward to June of 2021, which is exactly a year after they had first reached out to me. What they said was they were getting a lot of interest in Southeast Asia and South Asia, specifically India. And they wanted to seed fund this particular company and said that if I would evaluate for them. Right. So I got on this call with this particular founder from India, extremely smart, young, dynamic founder. But what I realized was the appreciation of risk. Risk is one of the very important pillars when you're doing a financing organization. The appreciation of risk was missing/lacking. So I gave my feedback to the company that was looking to invest in them. They did not. But what he ended up doing was planting a seed in my head and said that, hey, Kaustav, if you ever do something like this, which is cross-border, we will write a check for you. And that really made me pause and think. And what I did was spend a couple of months, went back to India, spent a couple of months talking to a lot of these software companies, speaking to regulators, speaking to VCs back in 2021, and realized that the opportunity was massive. The opportunity was massive, not just in that particular part of the geography. SaaS was really taking off, and that the cost of capital was also very expensive, continues to be extremely expensive. And when you speak to these software companies, you realize that at the end of the day, they all eventually want to come to North America, where it is the biggest consumer of software. So a simple question that dawned on me and I asked them was, hey, what if I give you the same capital in America, which is 4 or 5% cheaper? And they said, absolutely. And that was the germination of this idea, which culminated into where we are today. It started off as a price hedge in which across geographies, we wanted to fund them in America, these software companies that were growing at a very fast clip, VC funded, bootstrapped, it really didn't matter. We started off as a price hedge. We soon realized over the course of these past 2.5 years, that's what we've been at building this RBF platform, building RBF. We soon realized in the past 2.5 years that it's not only it became a price hedge, but we were treating a global company globally, where more often than not, that's always lacking. So that became another moat for us in which whenever we evaluate a global company, we always treat the revenues, treat everything that is coming to them globally as opposed to treating them locally. So I'll pause out here. That is how the entire germination of Efficient Capital happened.
I love that. And it's almost like I'm hearing you weren't searching to start this company, but it kind of came to you when people were coming to you to ask. And that's really interesting. I want to just go back and ask a couple specific questions. One is like, what was the total number of months that you would say that you searched before you hit product market fit? And I know it's hard to put a specific thing on it, but if you had to, what would you say?
I would say that, like, I'm going to break down my journey, right?
Yeah.
So I would probably say that I spent around 2.5 months to 3 months in researching, right? So what exactly, it is an idea, but idea is just the starting point. Like, how big is this opportunity? Are there any regulatory issues or not? Is there appetite in the market? Are the competitors that are already there and have captured biggest of the part of the market or not? So that was the first 3 months in which the formation of the idea and doing your due diligence, that how far you think that the idea can be executed into your vision. Then I would
And
say that,
can I pause you on
yeah,
that really quick?
please,
I
absolutely.
just I want to, so for founders who are in that right now, that part, just the research part, what type of sources of information were you going to? Because 2 months you could see like, oh, I could do like a couple weeks and I'd be good, but like it sounded like you were doing a lot more.
Yeah, so for me, it was not just based on analytical data where I can scour the web or do it. It was me talking in person. As I mentioned, I specifically spoke to around 30 to 32 SaaS founders. And the proof is in the pudding when you're speaking with them, and there's not a whole lot. There's quite a bit you can learn on the web and the internet, but when you're speaking to a particular founder, you get to know the pain point. You get to know the idea that you're talking about. Is it going to stick with them? Does it appeal to them or not? So that is the reason why it took probably more like 2 to 3 months for me to get to it.
I love that. And thanks for letting me kind of stop and go. I just want to make sure because that nugget is a really good one. And I want to make sure founders focus on talking to the actual source. So in those conversations, how did you get the founders to have those conversations with you? Was it like personal network or was it LinkedIn cold outreach? And what was kind of like the hook to say, hey, can I talk to you about X?
It was personal network, right? So I identified people who were in the ecosystem who were influencers, and those people were either my friends or in some point in time I've worked with them. And it is like burning my personal equity to be able to get to those founders.
Yeah.
Sometimes it could have been over a drink, sometimes it could have been over lunch, sometimes it could meant like going to their office. It meant like giving whatever time works for them. So you are at their mercy in terms of what they're willing to do. But I would say that it did take quite a bit of time, quite a bit of following up, and more importantly, burning your own equity.
That makes sense. And when you sit down in that conversation, if you'd pretend that I'm one of those founders, was it, maybe was it a 30-minute conversation in the first 5 minutes or catching up? And then how did you frame the actual research questions?
No, so for me, I most of it, I would say that by the time I was past 20, it had become muscle that had developed by speaking for the first 1 to 20. But the first 1 to 20 was more of a conversation because the honest truth was that I did not even know at that point in time whether I would do it or not do it. So it was me having an open-ended conversation, me wanting to understand the SaaS domain, which I had never done, me wanting to understand the pain points, me wanting to understand capital that is there. So there was a lot of unknowns. I was entering into a territory that was uncharted for me. I'd never done that before. So it was like being very open in the sense that you know what you know and you do not know what you do not know, and being very upfront about it. And that I thought was a lot more appealing to them, as opposed to in which you really need something and you're trying to extract a half an hour conversation with them. It was very free flowing.
Wow. And you did not have conviction on this yet. It was truly discovery.
I really did not have conviction. The honest truth is that at that point in time, I was in a full-time job and I was running a team, and yes, the conviction was much less. It built up. And again, that was the 30 people or 32 people that I spoke with included founders and included VCs that were there. And it's very easy to talk to VCs when you're not raising money. Right. So it's a lot easier conversation when you have that. So everything put together, the appetite, the geography, the idea, the missing part of when you speak with them. So everything sort of became a perfect storm for me to say that, hey, this has to be invested, not just in terms of a conversation, but probably a lifetime.
I love that. And so for the first like 1 to 20 interview, just conversations, it wasn't a structured agenda as much as just kind of asking questions. Was it at least asking around the topic of financing? Like, did
For
you at least,
sure, for,
yeah.
for for sure, right? Like you eventually come to it, right? So that's the reason I never wanted to box it. There were instances in which people had half an hour, and when people had those half an hour, I would not broach this topic at all because then it becomes like rapid fire question. But what I would do is gain the confidence to say that, hey, this was a great conversation for me to learn. Can I get another half an hour? Or can I get another hour? Right. And that is the way I approached it. If there were instances in which they say, hey, I only have half an hour. Great. But that half an hour, I would just absorb and learn. Right. Instead of me asking questions, I would just let them talk. And once you've built that rapport in which, hey, I'm not selling anything to you. I'm just wanting to learn. The second half an hour, second 45 minutes becomes a lot easier to request once you've crossed that first half an hour.
I love this is super insightful because it's just building that trust that you're like, no, I don't have anything. And I'm simply just
Exactly,
trying to,
because people are always, I mean, you and me, at least me, I'm always very, oh my God, like if somebody's trying to sell me something, and do I have to be rude enough to say no? And as soon as you realize there is no ulterior motive in terms of selling anything, it's a pure form of learning, people are a lot more open to it. Believe it or not, you'll be surprised. People are a lot more giving than we give them credit for. It's only the first step in which you need to make sure that they feel that you're not trying to extract anything from them.
it's that
It's that
trust.
trust. Exactly.
Yeah. Thanks for letting me almost rudely get to these details, but I think that there's an insight here and I didn't want to skip over. And that is there, as we get out of this research phase, is there a conversation that highlighted the moment of deeper conviction for you, like with an individual that you talked to?
I do not know whether there was a moment of epiphany in which, like, okay, this is the one, but it was a slowly build up. I would say the transfer happened when the first couple of conversations, probably in the first 10 conversations, were all operators, founders that were there. But when you start speaking with the VCs, that's when you start connecting the dots, right?
Mm.
There are two or three sides of every story, right? There's a founder story of what is missing, there's a VC story of their conviction, and then you go ahead and implement it. So when it sort of comes together, there is something that's missing. And when you speak to a VC about why this is not there, they would have heard pitches from people like us, 13 to a dozen. They can exactly talk about what works, what doesn't work, or why is it that they have seen something not working. And when you start speaking with the VCs, you see an idea and you see, a twinkle in the eyes, and you know what, definitely has merit. That's when you know that you probably have chanced upon something that has got a lot more than just these conversations.
So it's the validation that something is missing from the founder. That alone is not enough because you wanted to make sure that the VC saw it as a massive, as a big enough opportunity. And so is that what they were validating?
Yeah, because for me, like if I'm speaking to, let's say, five, six, seven founders, it could very well be they're not aware of something that exists, right? That is not the entire thing. It could very well be that they're not aware of a financing opportunity that exists. They might not be aware of it. But when you speak to a well-known VC, or when you speak with people who are investing money, they are a lot more knowledgeable about this space in terms of where alternative capital are available. Now, if you bring that idea to them and they say that, hey, this is slightly different than what I've heard, this is slightly different from what we have in the market, then you know it's genuinely missing. Then you know there's a gap, not just lack of information from the founder side. Again, not to discredit them, they're super smart. And but sometimes when you are building something in your own domain, you do not focus on something that might not be in your, like if you ask me like what are the softwares I'm using, software A and B, and you ask me why you're not using software C, I'm not knowledgeable enough to say that. And that is the reason I want to make sure that you get to hear both sides of it, not just from the founder operator but also from people who are funding and people who are a lot more cued into that domain.
Mm, I love that you're leveraging the VCs for their knowledge versus going to them for money. And of course, that's going to build trust. And I'm sure you raised from some of those VCs down the road.
Exactly, like exactly right. As I mentioned, VC is a lot more open to have conversations when you tell them that, hey, this is all about learning. And at the end of the day, I also approached it with the risk angle. I said that, hey, I'm a global chief risk officer, right? And I'm leading teams across different geographies. And sometimes I would say that, hey, we're also getting into India. I want to understand the India market. And you slowly and steadily make your way towards what you want in terms of questions, in terms of, hey, if this product is given, then what? So though that is, it's not like if you ask them a direct question, the question, why are you asking me something that does not sit with what you're doing? So you have to somehow finagle your way into extracting that information.
That's interesting. But the outreach to the VCs, I'm sure maybe some of them were in your personal network. Is that fair? And
No, so the interesting thing is, when I started this journey, I did not have a VC network. As I said, I was a risk guy. I had an amazing network when it came to the debt facility side of it, like really, really strong. But from the VC side of it, I did not have a good network. It was all about connections and leveraging those connections. I did know few of my friends are still very well-known VCs and investors. They helped me make those connects.
and they sounded natural because the way you framed it to the VC was, hey, like this is a learning conversation. Here's the credit, here's your credibility in your domain.
That's
And
exactly
here's
correct. So I started, one of the conversations was introduced. It was my resume saying that, hey, he's a risk guy. That's what he's done. And there's certain specific questions and certain specific thoughts that he has. Can you spare half an hour, 40 minutes? And they were very accommodating.
wow. That is really cool. Well, I know we're going quick through this, but once you got out of this research phase, what was your like what did it feel like to get conviction? Can you tell us any more on that? Like at the end of this, like you said when you said, hey, I think I'm good. I'm gonna make a decision.
So I will definitely tell you, and probably it'll be a good learning for a founder in terms of my failure, right? That was my first failure that I realized, and it was a very humbling experience. So this was back in 2021, October, November timeframe in 2021. Everything was booming. The VC market was flooded, flushed with funds. Everyone was getting funded. So after having these conversations, like when I spoke to a few of my VC friends, they said that, hey, with your resume and with this idea, raising X million dollars would be walk in the park for you. At that point in time, we were raising 5 million. It's going to be walk in the park for you. It's going to be very easy. So I said, as anybody would do, thinking that you walk on water, I spoke to like probably the top five VCs, right, from October end to December, just five VCs, thinking that, of course, one of them is going to come. And beginning of January, or probably end of January, none of them signed up for it, right? And there were various reasons why they did not. And it was a very humbling experience, right? You fall from a certain pedestal, you wasted 2.5, 3 months of your journey, you've already quit your other company, and you realized you are still in square zero for 2.5 to 3 months, right? And it was a good wake-up call. I think it's like learning by doing. And that is when I changed my strategy. I spoke to a lot more VCs that are seed funded, VCs that are not just cross-border, but uni country focused. And we were blessed to meet 645. They were our first VCs that invested in us and led the round of the seed funding. And then it was a matter of execution from then on.
Wow. So it was a humbling it wasn't a showstopper. It just didn't happen as fast as you thought in an environment where you
It
thought that
wasn't a showstopper. It was just a humbling experience that raising capital at any point in time is difficult, right? Raising whatever you've done at that point in time was 17 years. It did not matter. Your resume did not matter, right? So that is the reason I would say that it is coming down from a pedestal to a lot more humbling experience.
that is great insights. I just like finishing up your perspective on product market fit and what would you say? Because and I do want to make it clear for anyone who's listening to this, when you say founders, you really those are your customers essentially.
Those are our customers right now.
Yeah,
Exactly.
that's awesome. And so, what would you say is like some of the best, maybe the most challenging part that you had about hitting product market fit that maybe most people aren't aware of?
So the important part of hitting product market fit for us, and this is very specific to what we were doing, is we are a cross-border company, right? So what that means is we focus on founders who straddle between two geographies. We started off with South Asia, mostly India and US. Now we're getting into Singapore, Indonesia, Vietnam in terms of straddling between two geographies. And it was a concept which was never noodled on before, right? In which we are funding the same company in the US, and all that they have to do is moving the funds to India. So it was a new concept which people were not exposed to. And there were a lot of regulatory and tax related questions
Mm.
which we were not prepared to answer and which we did not even think through, right? We knew that moving money from one geography to the other had implications. But what we were not prepared to was, like, for a very specific country, like India as an example, it's a lot easier to move money to India, but a lot more difficult to move money out of India.
Mm.
There are many, many restrictions. Even for the money that you move to India, there are a lot of restrictions in terms of, are you generating revenue, not generating revenue. So these were some of the research that was not completed, if you may, that when we got into it, and it was again learning by doing when you start speaking to them and slowly and steadily. So that was one of the hiccup, if you may, that we were quickly able to identify. And not, I wouldn't say we use the word pivot, nothing changed, but in terms of our when we are positioning it, like what is it that we position it? So the positioning was slightly different from where we started. The cross-border element of it was nuanced, and we did not give enough credit to it when we started off this journey.
That's great insight. Thank you. I know we're coming to the end here. Just a quick question is, how many
Sure.
pivots did you have after that 2 to 3 month research period?
I would say that the biggest pivot, we had only one pivot right now, right? Good or bad, we just had one pivot right now. But the biggest pivot was when we started off this journey, we thought of funding it in locally. And what we realized was funding it locally was not just incorrect, but it was not competitive. It had regulatory landmines all over it. And we pivoted. Instead of funding it locally, we funded it in the US. That was the biggest pivot from when we started, and we have stuck to it.
Mm, that's really good. Thank you so much. And the last question is really shifting a bit on, like, so you already have the customers. What's your perspective on customer experience for the founders that you did end up buying, maybe in those first couple early years? Would love your perspective on that.
So, in terms of founder experience, all that I can say is it was nothing but positive. As I mentioned, it is a new concept that they were being exposed to. It's two different new concepts. One is the concept of revenue-based financing was still very nascent in Asia, right? Especially in India, it was still a concept that was building up. People were not aware of it. And the second thing of cross-border financing, right? That they can avail of a capital which is much cheaper in a different geography to be able to run their operations in a local country was a new concept. But once they started appreciating it, they immediately realized the benefit in terms of the cost of capital that was there. So the customer experience, the way I put it, was of apprehension and then delight.
Just that caution and then leading with
Exactly.
that. That's really cool. Well, thank you so much for your time. This has been amazing.
Thank you again. Again, as I always mention, it's a pleasure, and thank you for having me.
Thank you for listening. If you want to learn more about Zendesk for startups, check out our website, zendesk.com/startups. Also, we're always looking to improve, so don't hesitate to email me with any feedback on how we can ask better questions, guess the target, or anything else so we can do to better help you as a founder. My email is adam.o'donnell@zendesk.com.